In this lesson, we're going to learn how to trade volume imbalances using my SierraChart template called NQ SierraChart. It was going to be labeled the Snyder cut, but no. The basics are we have a volume imbalance drop. What is that? As in the other video, which hopefully you've watched before this one, a volume imbalance drop is when you have a candle gap. So you have a candle here, then you have a candle here. And in between these, there is a gap. So that is a candle gap. So the problem that you have is most of the time, you'll have a red candle and a red candle, and there's some overlap between these two. When you have a volume imbalance, you have no overlap and you have a gap or space in between these. It's called a volume imbalance. I'll call it a candle gap. You pick your verbiage. The proper is volume imbalance. Now, when you get a volume imbalance, I print a little dot over the candle, right? So you know that there's a candle gap between this one and this one. So that's where the little dot comes in. In addition to the dot, I go ahead and draw out a line that goes all the way to the right until it hits another candle. That is the volume imbalance indicator, basically line until future intersection. So we have a line until future intersection here and here. So we dropped a double volume imbalance, which is always an excellent trade, by the way. I love those. If you drop two of these in a row, I'm pretty much going to click it. So we left these two volume imbalances up here, and now price has wandered all the way down here. Now, when price gets bored, it's going to come all the way back up. So you're going to come from here all the way back up. Why? Because you need to fill these two volume imbalances. So that's what it's going for. So you can kind of sort of predict, yeah, you need to fill one or you need to fill two of these. So a great trade is when it drops a volume imbalance, and then the next candle is red. I'll go ahead and enter there, and I'll just basically wait for a green candle or a doji of some type. All right. So that's your main interface, and that is how I trade that. This is 1000 tick NQ. It does not work on 1 minute, 2 minute, 5 minute, anything. I like 1000 ticks, and that's how I like it to work. All right, so now let's look at what else we have on here. Up top, we have the same thing. So you basically have the same thing that you had here, except we have 2000 ticks instead of 1000 ticks. Now this is reference only. This is what I make trade decisions on, okay? So this is just reference. So there's no reason for me to trade this. There's no reason for me to have a little trade window open over here for buys and sells and cancels. I don't need all that. Don't need all that because this is only for reference. So when I say reference, like what am I doing with it to reference it? I like to see some agreement between this window and the window below it, right? So let's pause and find an example. Here's one where we had a candle gap that was filled. So this is a candle gap from yesterday. And now it was filled. So we did what we needed to do down here. You'll also look at the 1000 tick and you have exactly the same. So I have the same volume imbalance fill on both the reference, which is the top. I'm never going to be trading from this one, and my trade window. So my likelihood of trading a long off of this is good. It's really good. And as you can see, it did finally go up. So field to volume imbalance. As always, longs take more time to set up, and shorts take almost no time to set up. So if you're looking for a long to immediately just go straight up, probably not going to happen. It's going to wander around here, and it's going to require more time to set up. Longs always do. Longs always will take more time to set up. So it took time to set up, and then it went up. So this is where you have an agreement between the trade and the reference. Here's another reference over here on this side. We have a S&P 500, S&P 500, and I believe this is on the 500 tick or 300 tick, whichever that you like. In this example, let's double check here. We're on 300 tick in this example. Sometimes it's 500 tick because this moves way too fast. So this will give you another place that you can search for an agreement between all three windows. When I have an agreement between all three windows, I love that. Like I'm guaranteed going to trade that. So let's look over here at this particular window of time. On this window, we have a volume and balance fill. Not only that, but it wicked. So we came back, we wicked a volume and balance, and then we printed a higher green candle. So we have a wick fill right here, this wick. And once the wick filled it, we have a motion to the other side. Now, again, this is a reference, not a trade window. So I'm going to look at that and say, ooh, that's interesting. Let me come over here to my trade window. And let's go to that exact time, which is 11:04. Let's zoom to 11:04 and see what was up. All right. At 11:04, we're over here, and we just have these two things here. A little bit of a higher risk trade. It's not dug deep into the Bollinger Bands or anything else. I'd go ahead and take it, but I'm only going to try like one or two candles. So you have an agreement between, again, a reference. So reference above or a reference to the right. So I'm looking for an agreement between those, or I'm looking for like what I just saw with the reference has a volume and balance fill right here, right? The reference has a fill, but there's not the same thing over here. Would I still trade it? Probably. Why? Because the reference said that this is possibly just a great trade. And so that's what I would do. So there we go. So we have two references, one main trade window. And those are the basics on how to trade volume and balances. So as always, I'm looking for a 2-to-1 ratio. So a lot of people ask, what's your stop loss, blah, blah, blah. My stop loss is going to be the swing, right? Not like the hard swing, but like here's a swing. Swing is not at the back of here, right? That's not the swing stop for me. This is going to be the swing right here. So you have a swing because it's a reversal. You have a swing and then drop a volume and balance. That's a good trade as well. When you drop a green volume and balance below, so you want the green on the low side. Just think of G-low, like J-lo. G-low, remember glow. Green on the low, glow, J-lo. Green on the low, and that's where I like it. Red, it goes on top. So R top or ROP or whatever. I'm looking for red volume and balance on top or green volume and balance on bottom. So glow or R top. Now I have a volume and balance on the low, so I have a glow. And I'll go ahead and trade that, and I'll trade it to the other side of the Bollinger Band. Ideally, you'd have a 2-to-1 ratio. So here, my stop, entered here, my stop loss is here. 1, 2. So there's my take profit, and there's my stop loss. So stop, take profit, and there is my entry right there. All right? So that's what I would do. I'd go for a 2-to-1, leave a runner going to the other side of the Bollinger Band. The other side of the Bollinger Band many times is a pretty good place as well. So if you get like a really, really, really good trade, then I'll put a couple of minis on it, etc. All right, so let's go a little bit advanced. Now that we have the basics covered, we're going to go some advanced. So at the bottom here is a delta intensity, I call it. That's basically anytime the delta goes apeshit. So I'm looking for the delta, the volume, just to go ape, just to go nuts, right? And when it does, that means that there's some volume, means some action, there's something going on. So I'm going to absolutely do this, right? And so what I have is a delta intensity. So the delta intensity is the beginning of a trend, or it's the end of a trend. So this is the begin or the end. I don't know which. I have 3 delta intensities right here, and right here. That looks like the end of a trend. It looks like the end of a trend. And the good news is on the other screen, you have a volume imbalance fill or whatever here. So I have end of a trend, end of a trend, end of a trend, because the volume increases as people just dump on the bottom. So we have a dump, end of a trend. It looks like end of a trend, because we're at the end. And now when I start seeing some green, and especially with the volume imbalance drop, that is a good reversal signal. So these 3 were a good reversal signal if combined with, again, volume imbalance drop here. What is this? It looks like the beginning of a trend. That's this candle right here. So it looks like the beginning of a trend. And so that is good. That means we got volume to accompany our trend, which is great. That means I'm going to get more than one candle. So now I'm going to pull back. I got some good volume to go through here. Let's look at this. We have big money here and here. Looks like the end of a trend. How do I know? Because you remember on this candle, if you go over here, that is this candle right here. That's where you had the volume imbalance fill. So if I come over here and I see end of a trend, along with the volume imbalance fill on SPX, right? So the volume imbalance fill, and I have 2 end of a trend indicators. That's gonna be a long for me. Right? It's gonna be a long for me. Let's go over here. Let's see. This looks like the beginning of a trend because it's a little early on in it. This looks like mid-trend. I have no idea. I have no idea why I was doing that. Let's look at a couple more examples. Here we have an end of a trend and a beginning of a trend. Now this is fucking handy. Over here, I have a green candle indicating the end of a trend right here. I have a red candle indicating beginning of a trend right here. So this is the ultimate trade. I have confluence, not only that this is the end, but also that we're beginning with volume on the other side. So we got a volume dump here, and I got a volume increase here, and then I start going down. You guarantee I'm going to be in this fucking trade. You guarantee I'm going to be in this trade. Here we have an end of a trend here, and then we scooch back up a little bit. So you're going to combine all of these together, and I will have other videos with sample trades, like how to trade this all day, profit, take profit, live trades, whatever, on this system. But I just want to let you know how to use this template. Now, the template is available on the Google Drive. It's called NQ SierraChart, link in the description, and thank you for watching.